This is Fintech Insider News. This week, payments power move as Mollie acquires GoCardless. Monzo makes major moves, securing a European banking license and acquiring mortgage firm Habito. And are millennials getting savvier with Christmas spending? We dive into the latest data. We'll be discussing all of this and more on today's show, so don't go anywhere.
When the holidays start to feel a bit repetitive, reach for a Sprite Winter Spiced Cranberry and put your twist on tradition. A bold cranberry and winter spice flavor fusion, Sprite Winter Spiced Cranberry is a refreshing way to shake things up this sipping season, and only for a limited time. Sprite, obey your thirst.
Oh, Hilton stay, your beds are soft and cozy. No lumpy couch, no stiff futon, no shower line at crack of dawn. Oh, Hilton stay, a holiday you're saving.
When you want holiday comfort you can count on, it matters where you stay. This season, enjoy spacious, comfortable rooms and friendly service when you book with Hilton instead. Hilton for the stay.
Hello and welcome to episode 1025 of Fintech Insider, brought to you by 11FS, the 5-time consultancy of the year that works with banks, investment firms, digital banks and fintechs to build the next generation of financial services. I'm Benjamin Ensor, Director of Research and Strategy here at 11FS. And this week, it's our final Fintech Insider News episode before we take a Christmas break. So before you swap fintech for festive traditions and the out of office goes on, we're rounding up some of the last big stories of the year. Joining me to help unwrap these headlines is our panel. Let's meet them. First up, a very warm Fintech Insider return to Hiroki Takeuchi, Chief Executive at GoCardless. Welcome back to the show, Hiroki.
Thanks for having me. Fantastic to be back.
Obviously, a really big week for GoCardless, which we're going to dive into soon. But can you tell our listeners, perhaps particularly those outside the UK, a little bit about what GoCardless does and why you set the company up in the first place?
Sure. So at GoCardless, we've been building a platform on top of the bank payment rails that exist around the world to make it easier for businesses to get paid by their customers. We focus mainly on businesses with recurring payment models, subscriptions, utilities, financial services, lots of different use cases, but where there's this ongoing relationship between the customer and the merchant. And we've been going now for almost 15 years, very much focused on those rails, which are a really great way to get paid in the sense that they're much more direct, they're more efficient, they're more reliable, but have not had as much technology built around them to make them more fit for purpose in this world where everything is done online and you have APIs and everything else that makes payments more easy when it comes to the other rails around the card payment networks. And so that's what we do. And as you said, last week we announced that we've agreed to combine with Mollie, and very excited to talk more about that in a bit.
Congratulations to you and all of your team. Okay, and we have a Fintech Insider debut for Jazz Shah, Fintech product expert and author at Fintech Under the Hood. Welcome, Jazz. Would you also tell your listeners a little bit about you and all of the things that you do?
Sure. Yes, I'm a product person. I've worked in financial services for nearly 2 decades. Career is kind of split into 2 parts, I guess. The first part was working at large traditional financial services organizations. So 5 years stint at Citibank, building products inside their fixed income organization to basically help trade execution. 2 and a bit years at Schroders, and then 3 and a bit years at Fidelity, again, building products inside those organizations. And then the past nearly 9 years, I've been working with and for lots of different startups, helping build a bunch of cool stuff. So neobanks in various regions, help get a PFM app to market, scaled an SME lender here in the UK, and a bunch of other different products across the globe.
Fabulous. Well, welcome. Okay, well, let's jump into the news. We said it was a big week for UK fintech, and the first story definitely proves it, which is the news that GoCardless is to be acquired by Mollie. So the Dutch payments firm Mollie has agreed to acquire the UK-based fintech GoCardless, signalling further consolidation in payments. Together, Mollie and GoCardless will serve more than 350,000 businesses with integrated card, local, and bank payment solutions. And the combined business aims to simplify payment infrastructure and support recurring revenue models, aligning with both firms' strategic goals. So, Hiroki, obviously it's fantastic to have you on the show. Congratulations to you and all of your colleagues on this. Can you tell us a little bit more about the deal? I mean, why Mollie? What's sort of exciting about the logic of bringing those two companies together?
Yeah, I think in very simple terms, the reason why we're doing this deal is that we believe that the combined business is much more attractive than the standalone businesses on their own, right? And the reason for that is that what we've built is very complementary to each other. So if you take what we've built, we've been very, very focused on a specific set of payment rails, which is around the bank payment rails, so things like direct debit, open banking, etc. And that's given us a platform to go and serve a specific subset of the whole payment ecosystem in a really compelling way. And then equally, Mollie has built a somewhat different offering, more focused on e-commerce merchants and focused on a different set of payment rails. So the card payment rails, but actually also significantly around local payment methods. And one of the things that they've done a fantastic job of is building a really hyper-localized approach that caters to the differing needs of each market, based in continental Europe. And when you look at the two businesses together, we thought that, from a product perspective, the product suite was really compelling. We often find that the customers that we serve have a need for the products that Mollie offer and vice versa. So if you just take a typical example of something like a gym, right, which is a very typical use case for GoCardless, we'll help them with their membership payments, collecting subscriptions every month, but they might also need in-store payments so that they can sell protein shakes and merchandise, or they might need capital so that they can buy new gym equipment or open up a new location. And we've not really been able to serve them for those other use cases because we've been laser focused on the bank payment side, whereas Mollie have been building out all of those other products. And so we think the combination can serve our joint customers in a more compelling way. And we think by doing that, we can unlock a lot of value. And that's really what this combination is about.
So the logic is you can sort of cross-sell the GoCardless capabilities and the Mollie capabilities to sort of each other's customers.
Yeah, absolutely. Yeah, and I think it most notably, what we think is unique about it is that there's always this tension between staying focused on one thing and doing it really, really well, or going and building a broader set of products, right? And I think one of the things that we think is compelling about this combination is that we've spent 15 years building the best-in-class bank payments offering in the world, right? I mean, I'm confident that there's no one else that's done a better job than us of that. And equally, they've been laser focused on their offering, and so as a result, you combine it, you don't just get a broader product set, you get best in class products, right? And I think that's something that we think is quite unique about this combination. So absolutely, we think it's a big win for our customers.
Jazz, I'm sure you're itching to come in. What did you make of this news? What do you think?
I was going to say, I'm not interested to come in. I think you should hear from the person who's closest to what's going on. Again, I echo what Hiroki said. It makes sense, especially if customers are maybe existing GoCardless customers are maybe at a point where they're growing and expanding, and maybe their customer base want different options to pay. It makes a ton of sense. I mean, my direct experience with GoCardless is that I suggested I'm part of a Rebel book club, which is a book club that's kind of grown over the past few years, and they were struggling to figure out how they set up a direct debit payment for all of their user base, which has grown to around 5,000 now globally. And they were just like, how do we, take a payment from our customers? We can't really go to HSBC. Their fees are quite expensive for what, we're trying to do. And I was like, GoCardless are around. They've been around for a while. So I think it makes sense, and especially as GoCardless is customers and clients grow and want to expand the way they take payments. And I think it makes a ton of sense for Mollie as well.
Thank you. Hiroki, can you tell us a little bit about sort of how the deal came about, sort of who approached who? Had you been working with Mollie in the past? Did you talk to them? Had you sort of had any kind of sort of partnerships or relationships? Or was this sort of out of the blue?
No, not at all. I mean, I have known Koen, who's the CEO there, for many years now. I initially met him when he was the CTO at Klarna, and he brought us into Klarna as a customer. So, they've always been one of our big flagship customers that we've grown a lot with, and that's how I got to know him initially. He then went on to Mollie, but also had joined our board. So, Koen was on our board, and we got to work very closely together. Got to know each other's businesses really well, and at a certain point, we sort of got to this realization that we're facing a lot of similar challenges, but also the businesses that we've built are very complementary. We talked a bit about the product set, but also when you look at things like the geographic footprint, the customer mix, there's a lot of similarities where you want there to be similarities and a lot of differences where you want there to be differences, and it became increasingly apparent to both of us that exploring a combination could make a lot of sense, and that's really where this first started.
So you could just see a really strong sort of commercial logic.
Yeah.
Because when you came on the podcast last time, back in July of last year, 2024, you said you felt the business had still a lot so that GoCardless had a lot of growth ahead of it, and there was a lot that was sort of really keeping you motivated, keeping your teams motivated. Has anything changed, or is it just that you just realized that combining with Mollie would just work better for both businesses and your customers?
Yeah, I mean, from my perspective, I don't really see this as an endpoint, right? I mean, it's just a milestone, and we're not really doing this deal as even the structure of the deal, it's a predominantly equity-based deal, right? So it's not like it's everyone's just cashing out or something. We're doing this because we think that there's a lot of upside to what we can create together, and fundamentally that's what drives me, right? Which is, I love talking to customers and hearing about how we're solving their problems, making their life easier. And if we can solve their problems even better by being part of a larger organization and combining with another business, then that's fantastic. And I think one of the things that for me is exciting about this at a really personal level is that this is not a situation where you've got a really big company that's acquiring a business, a much smaller one, and you just kind of disappear, right? This is a combination where we're really going to have to make it work together, and we're going to be creating something of substantially bigger scale, but in more the spirit of partnership, right? I mean, they're acquiring us, and we're not trying to pretend anything otherwise, but it does definitely feels like we'll still be fulfilling our mission and working in much the same way that we were before, but with a much more compelling product set by combining the two businesses.
Yeah, sort of building jointly.
Yeah, absolutely.
You gave us that nice example of a gym earlier and saying, well, you could have a gym that's got, it's got the subscriptions coming in from the gym membership, but it also has lots of maybe point of sale and other types of payment and so on. Between Mollie and GoCardless, have you actually got a number of sort of joint customers? And I realize, your strengths are maybe in slightly different markets and so on, but did you already have some companies that were actually already starting to use Mollie and GoCardless?
Yeah, I mean, we definitely have a number of joint customers. We also see, oftentimes like customers that work with us will also work with other PSPs as well. So, it's not just about customers that we already have jointly. I mean, and equally, we were already, starting a partnership before we even started exploring this, so that Mollie could offer our bank payment solution to their customers as well, right? So they were seeing a very concrete demand from their customer base. I would say that in terms of the target customers that we've focused on, there is somewhat of a difference because, we've been very much focused on these kind of recurring payment use cases. They've been focused much more on these kind of e-commerce use cases. So, there is a Venn diagram, where there's something that meets in the middle, but they are somewhat separate. I think what's interesting though is that the types of customers that we've targeted is quite similar in terms of like the size and scale of the businesses that we serve, right? Like we both started with small business customers. We've both gone up market gradually. And so, in that sense, we know what it's like to serve, the businesses that we serve, and there's a lot of similarities there. So different industries, but similar sort of scale.
Jazz, I mean, Hiroki and his team have obviously got a lot of work to do to sort of integrate the two businesses, integrate the product suite, start thinking through how to take the sort of products to new products to the existing markets and new markets and so on. What kind of challenges do you think GoCardless and Mollie are going to have to sort of tackle over the next few months as they try and sort of merge and integrate? What sort of things do you think might trip them up, and what are the opportunities?
I mean, I guess it's probably maybe the positioning to existing clients and maybe new clients. Like, what is that split? Because I think Mollie does offer a recurring bank payment solution. So it's what's the split going to be? How do you position the go-to-market? But this is all stuff that can quite easily be mapped out and thought through. You look at the existing customer base, you look at, what new markets are we trying to enter? Are we trying to grow market share in our existing customer base using our combined product stack? When and where do you point people to Mollie versus GoCardless, or GoCardless to Mollie? That's the stuff that can be ironed out, to be honest. But as long as it's well thought out, and I guess it's not, to Hiroki's point, this is a symbiotic partnership rather than we're acquiring you, we'll absorb some of your tech into our business and then we'll decide. It's more of a, we're merging and we'll together come up with a compelling strategy to go to market with as a combined product set rather than as a Mollie and GoCardless. So I think these are all, there's challenges, but they're not major challenges from what I can see.
I think one thing I would just add there, though, is that one of the principles that we've been very clear on through this whole exploration of combining has been that we really truly want to build a single platform, right? So it's not like we're going to continue having the GoCardless product and the Mollie product, and they're going to just sit, individually in the market in the long term. Like we think that the real value of this combination comes from fully embedding both of our products into a single platform. And obviously that's going to be a big technical lift. But one of the things that helps with that is that we've had very similar approaches to building products, very similar technology stacks. So we understand and talk each other's languages in a very fundamental way. And so, I think that's one of the things that we'll be really focusing on initially, is getting to that point where almost like that question that you raised, Jazz, is almost a moot one, because you're not signing up for GoCardless or Mollie, you're signing up for the combination, and then you get access to all of the suite of products in a really cohesive way, and is through a single integration.
Just a cross question, Hiroki, was that one of the things that was looked at as part of that acquisition, part of the merger, is like how closely aligned are the tech stacks? Because again,
absolutely,
when I've seen it before, it's almost like an afterthought. It's, you've got X number of customers, kind of similar ICPs, but you don't do that. The whiteboard of, okay, here's Mollie's tech stack, here's GoCardless' tech stack, here's what steps 1, 2, and 3 look like to create a single compelling product. A lot of the time, that's kind of almost an afterthought.
Yeah, look, I think that we're both quite product-oriented companies, right? I mean, like, Kuhn is technically their CEO and CTO, right? I mean, so as you can imagine, he was quite involved in, how would we actually technically do this, right? And we did think about that in quite a lot of detail for the stage that we're at in the integration. And so this isn't an afterthought. This isn't just a pie in the sky. This wouldn't it be great? This is a pretty well thought through plan, and it's quite a fundamental part of our vision. And so, not to say it won't be difficult, not to say that we won't face complexities, but that is the goal.
Fabulous. Last 30-second question to you, Jazz. As Hiroki mentioned earlier, it's a largely stock-based transaction. Do you think we may see sort of other deals like this where we're getting sort of consolidation in European fintech on a kind of stock sort of merger type approach?
I mean, I've worked on a couple where they're almost acqui investments. They're like, we'll take stock, we'll invest 5 million or 10 million. We want your product, but we also want you to remain an independent entity. So there've been a few of those in the recent history, and I've been part of a couple. But I think we'll see more, just because I just think people are looking at long-term gain and making smaller bets rather than making full-blown acquisitions. Yeah.
Yeah. Okay, well, on that note, we're going to wrap up that story. Massive congratulations to you, Hiroki, and all of your team for all the hard work you've done over the past 15 years building a great business. I'm a big fan of both GoCardless and Mollie, so personally, I'm very excited to see the two businesses coming together. So best of luck to everyone at the two companies.
Thank you.
Okay, we will just take a quick pause here, and we will be back very shortly.
The Who's Down in Who Newville were making their list, but some didn't know Walmart has the best brands for their gifts.
What about toys? Do they have brands kids have been wanting all year?
Yep, Barbie, Tony's, and Lego. Gifts that will make them all cheer.
Do you mean they have all the brands I adore?
They have Nintendo, Nespresso, Apple, and more.
What about...
So the Who answered questions from friends till they were blue. Each one listened and shouted, from Walmart? Who knew? Shop gifts from top brands for everyone on your list in the Walmart app.
Here's my 30-second story with Guinness. As soon as my sister and I get home for the holidays, we don't even unpack. We head straight to our pub. The bartender already knows our order, Guinness and fries. We laugh all night, catch up with old friends, and walk home with faces sore from smiling. It's one of my favorite nights of the year. That was my 30-second story with Guinness.
Guinness Draft Stout. Please enjoy responsibly. Imported by Diageo Beer Company, USA, New York, New York.
So now a quick break from the headlines to spotlight our latest Insights episode. To celebrate another wild year in fintech, we looked back at some of the most memorable moments from an eventful 12 months. If you've been wondering about the fintech feel-good story of the year, the buzzword of the year, the partnership that blindsided us all, or the fintech glow-up of the year, and no, we're not just talking about a rebrand, we've got you covered. And, of course, we'll pause for that one jaw-dropping moment that made everyone go, what? Host Laura Watkins is joined by 11FS experts Joe Colchester and David Barton-Grimley to dissect it all. We even asked our community for input because honestly, there's a lot to get through. Find it on the same feed as this episode. And now back to the news. Our next story is that Monzo has secured a European license and opened an Irish waitlist. So Monzo has secured a full European banking license from the European Central Bank and the Central Bank of Ireland, enabling it to operate as a bank across the EU. The license supports European expansion strategy, with Dublin chosen as its EU headquarters. Monzo has opened a waitlist in Ireland ahead of launching personal, joint, business, children's and savings accounts with Irish IBANs or account numbers. The bank now serves over 14 million customers and hundreds of thousands of businesses, positioning itself as a major digital challenger bank across the UK, Ireland, and now Europe. Monzo has also made its first major acquisition, buying digital mortgage broker Habito to expand its all-in-one super app, building on strong demand with 450,000 users already tracking mortgages through its home ownership feature. At the same time, according to reports, Monzo is undergoing some internal turmoil as major shareholders are reportedly pushing to remove Monzo's chair and possibly reinstate the outgoing CEO TS Anil, highlighting tensions over the bank's strategic direction, governance, and IPO plans. Wow, well, there's a lot to unpack there, but let's start with Revolut versus Monzo. You know, they started at a similar sort of time with similar sorts of strategies and then have gone in very different directions since. Jazz, what do you think? Is this Monzo sort of finally following Revolut's strategy, or do you think this is something different?
It's something different. I mean, Revolut's strategy was, I guess, very much the old school of build fast, try not to break things. I think in Nick's own words, they place bets. They place a lot of bets kind of everywhere, and they try and place big bets, and hopefully they pay off. But they've gone largely the e-money route, and that's how they expanded across Europe, and probably why when you're comparing customer numbers, and I see these on LinkedIn now and again of Monzo versus Revolut. Monzo's got 14 million, Revolut has 60 million. It's not really a fair comparison because Revolut has largely expanded under an e-money license across a larger economic area with a bigger market. So it's a bit different. I mean, the playing field is more level now because obviously Revolut has their passport license from Bank of Lithuania. So they've already got a kind of banking presence. So the only place they're not a bank at the moment is in the UK, if you look at that area. So it's a bit different, but the playing field is leveled a little bit. But I'm sure the comparisons will still come out, the customer numbers to customer numbers, which are, again, it's not really an apples to apples comparison.
I believe Revolut has a restricted banking license in the UK, so I'm not quite sure whether that does or doesn't quite make it a bank. But your point is absolutely valid.
It doesn't.
It doesn't, right? It doesn't. Okay.
It still doesn't. Yeah.
I know they obviously can't call themselves a bank. Yeah. Hiroki, what did you think of this? Well, there's a lot of news here from Monzo, but particularly the news about the sort of European banking license and opening up a headquarters in Dublin. Is Dublin the obvious place to go to expand into the EU? What was your? I mean, I realise you've been quite busy over the last couple of weeks, but did you have a view?
Look, I think from my perspective, what this really is about, both on the sort of European front, but also on the Habito acquisition, is this kind of expansion, both internationally and product-wise, right? And I think this is a trend that I think we'll continue to see in fintech, where in order to continue to drive significant scale and build significant value, you need to be able to expand across markets and expand across product sets, right? And I think this is what we're seeing here with Monzo. They've done an amazing job in the UK, built a very strong leadership position here. But if they want to continue to build a lot of value, then they're going to need to be able to build not just in the UK, but beyond, right? And then also, being restricted to a narrow set of products really limits how much value you can capture from each customer that you're onboarding. And so, the extent to which you're able to cross-sell additional products, I think, is also a really important point, right? And in some ways, I think that is something that Revolut has done an incredible job of, is like being able to expand across so many countries and across so many products so effectively, is a big part of the reason why they're in the position they are. So completely agree with Jazz's point about comparing the numbers side by side might be a little bit misleading, but I think the general theme of international expansion and the general theme of product expansion is going to be something we continue to see. And one of the things that I know from first-hand experience is that doing that in financial services is really hard, right? Because there is a lot of differences from jurisdiction to jurisdiction, whether that's regulatory differences, cultural differences, different payment rails, different infrastructure rails. There is a lot of differences in the way that people consume financial services from market to market, and so I think that's the one of the challenges that everyone will face.
Indeed. What do we think about Ireland? Not as a country, but as a market for Monzo to move into, because Ireland is quite possibly Revolut's strongest market. I mean, Revolut is a verb in Irish, as in, I'll rev you that tenner I owe you. Sorry, I can't do an Irish accent. Apologies.
And you shouldn't do it.
I have some Irish blood, but I can't do the accent. Do we think? Is that too tough? If you're trying to compete, against Hoover and vacuum cleaners, is it too hard? Are they setting themselves, an uphill struggle? Because you've really got to differentiate. When something's that embedded, Monzo's going to have to come up with a reason why Irish people should switch from Revolut to Monzo, or at least consider Monzo. What do you think, Jazz? Do you reckon they'll be able to differentiate?
I mean, on the first point of, I guess, why Dublin versus any other country in the EU, I think Dublin or Ireland is a no-brainer, not just for the culture, and this is just selfish reasons, but there's a lot of talent. There's a lot of tech talent in Dublin. I think 2010, 2015, there's a lot of banks in Canary Wharf were setting up kind of subsidiary secondary offices in Dublin. Again, I was at Citibank in 2010 when lots of the tech team moved over there. So there's lots of talent. The language obviously helps. And I think that it's a lot closer to London than it is Paris. So if you're going to set up a HQ to launch into Europe, then it's like the logical path of least resistance to start expanding into Europe. On the products, I think I agree with you. Literally every single Irish person I've ever spoken to has a Revolut account. That's not a data-driven assessment, but again, most of them use Revolut. But then there's this weird, most of them use Revolut, but most Irish folks still have a traditional bank. I think it's Allied or Bank of Ireland as their primary bank. So I think the long-term strategy for Monzo is to try and become primary bank. Whereas Revolut, it seems like, and maybe this has changed since they got their their full banking license and set up an office in Dublin from 2022, and maybe that's changed, but it seemed like they were okay being kind of side of wallet provider. But Monzo, I think the strategy is we're going to try and aim to switch people and put their salary into our account and become a primary bank. That's also why I think the Habito acquisition, all of the stuff that's happening is all geared towards becoming primary bank. That's their objective. I don't know if Revolut's is the same. I think it probably is long term, but Revolut's proposition is slightly different because of what Hiroki also mentioned, is they've come in from a different angle. They're like e-money, lifestyle account, but not usually primary bank. So I think the approaches are different, but it makes sense to start in Dublin, and it makes, I think that's the reason why they're doing Dublin, is because they're going up against Revolut, but in a different way. They're becoming primary bank, so they're kind of going up against Revolut, but mainly Allied and Bank of Ireland.
Hiroki, you already talked about the sort of products and the mortgages and a little bit, but is the acquisition of a mortgage company a sort of genius move? Because actually Monzo's customer base skews younger, quite a lot younger. You know, there's a lot of customers probably in their 20s, some in their 30s. Exactly the target, the sort of people who are looking for mortgages, trying to buy houses and so on. Are we going to look back on this and say that was a really, really smart move? What do you think of the mortgage acquisition?
I mean, I'm not sure it's rocket science, to be perfectly honest with you, because these financial services have existed for many hundreds of years at this point, and have been packaged up by the banks in such a way for a very long time, right? So it's not like a completely out there thing for a bank to offer mortgages. I think that what's probably more interesting is how easy it is to integrate those products into a platform, right? Because I think fundamentally, whether it's Revolut, Monzo, all of the challenger banks, that I think a big part of the strategic edge that they have comes from the fact that it's all built with modern technology in an automated way, and isn't like built on these kind of old crusty banking cores that have been created over time into these Frankenstein monsters that are very hard to change, right? And so I think what's more important than the product mix itself, and obviously I'm sure there's a lot of thought that's gone into the sequencing of this, I think it's more important that they're able to integrate these offerings in such a way that they still maintain that technology edge. And that's where I think Habito makes a lot of sense, right? It's a modern challenger mortgage provider, built with modern tech in ways that, I'm not close to the team, but I imagine it's very similar product approach to the way Monzo has been built, which I do know quite a bit about. And that will, I think, make it a lot easier to integrate. And that's where I think this makes a lot of sense.
Last question to you, Jazz. On the sort of product standpoint, do you think Monzo and Revolut can sort of maintain the sort of simplicity of their product approaches? Because, initially they sort of came into the market and there was sort of one or two things that they really stood out for and were known for. As you add more and more products, more and more features, more and more capabilities, it becomes kind of harder and harder to design a really easy to use app. And there are people who say, oh, Monzo is not as easy to use as it used to be, or Revolut isn't as easy to use as it used to be. I'm not sure whether that's fair or not, but it certainly gets harder to sort of bring all those things into an app. Do you think this kind of, as they sort of push towards maybe super app and adding more and more features, do they risk just overwhelming and confusing their customers, or do you reckon they can pull that off and communicate those clearly?
I think if anyone can pull it off, it will be them. I think that is probably the biggest challenge that they've got over the next 5 years. Now they've got a banking license in the UK and across Europe, is they'll probably push to add more products to the stack. There's an insurance product I think they were looking at, or they've recently launched. They've got Flex. Using tiles, I think, is getting to a point where it's almost become bit of a stale trend because lots of people have swipe tiles and there's only so much you can put in there. I think if you've got 10 products and each product is on a tile and you swipe 10 times to see all the different products, it's not, you're going to start to see drop off once you get to tile 4, 5, 6. But I think, yeah, it's a challenge, but it's something that I'm sure they're thinking about. And I guess the simplest option is to go big bag style and have a huge burger menu. I don't think they will go that way and have 3 lines that you click on the side and you've got home, current accounts, business accounts, investments, mortgages, savings. I don't think they'll go that approach. But I also think this consumer behavior change, ChatGPT, Perplexity, Claude, all of these AI providers and the maybe consumer behavior change to interact with AI more will maybe help them out. And maybe every bank will have an AI interface and actually you can hide a load of products behind it, surface them as and when. You don't have to have static homepages. Every homepage is dynamic. And there's a personalized AI layer that sits on top and suggests products as and when customers need them. I think that's probably the direction it'll go in versus the burger menu, but remains to be seen. I still think it's both of their biggest challenges, to be honest.
That's a really, really interesting point to end on. And there's certainly a lot to play for, isn't there, in the sort of European markets where all the digital banks like N26 and Bank and so on now competing with Monzo and Revolut. Okay, let's move on to our next story, and we're going to change continent. So Orange Money Group and Visa have announced a strategic partnership to accelerate online payments in Africa. So Orange Money and Visa are partnering to expand access to financial services across Africa and the Middle East. The partnership has already been successful in Botswana, Madagascar, Jordan, and Côte d'Ivoire, with the Orange Money Visa virtual card now available to users in those countries. The virtual card can be instantly created and funded via the Max-It app, enabling secure online payments locally and internationally, with physical cards planned for future rollout. The collaboration will gradually expand to new markets, including Guinea, Burkina Faso, and the Democratic Republic of Congo, aiming to provide millions of users with a simple, secure, and globally recognized payment solution. Hiroki, I'm going to bring you in first as a payments expert, though possibly not an Africa expert, and I apologize, I have no idea whether you're an expert in Africa or not. A lot of the focus has been on sort of individual countries and sort of trying to enable payments within individual African countries, but there's also this opportunity of payments between African countries and helping businesses in Africa. Have you ever sort of looked at the opportunity in Africa? I don't think GoCardless operates in Africa currently.
No, we don't. No, I'm not. Can't claim to be an expert on payments in Africa. So it's not an area that we've looked at closely. What I do know is that there's clearly been a lot of growth in payment methods that have almost leapfrogged the need for a bank account. Where banking penetration has historically been a lot lower. So things like mobile payments have, taken off there actually in much faster than in other areas. And in some ways, I think this is just an extension of that, right? It's about enabling people to pay in the simplest possible way, and especially given the high level of mobile penetration in those markets, I think that this makes a ton of sense.
Yeah, Jazz, one of the striking things about some of the African countries is the relative youth of the populations. That some of the African countries have got much younger populations than, let's say, Japan or the United Kingdom or the United States. And so you've got a population that is maybe much more open to sort of embracing new technologies or different technologies. Do you think that's part of the opportunity here for firms like Orange and Visa?
Yeah, I think that's part of the opportunity. And I guess, to touch on Hiroki's point as well, access can be a bit of a challenge. So if you're trying to maybe if the goal is to transition to providing bank accounts, even though that's probably not the best thing to do at the moment, where access, internet access and smartphone access can be troubling, then making a mobile payments play that it makes logical sense. But I think the main point here is actually giving access to populations that maybe don't have access to payments directly. That's the bigger play rather than still relying on cash a lot of the time. So I think, and I think the youth play is an interesting one. It's not something that I'm really across. I know that I worked in a couple of countries, like Saudi, for example, where the majority of the population is millennial. So maybe, again, this is a step to providing more digital-first services. But yeah, I think the bigger point here is access and inclusion, I think.
I think the virtual cards angle is very interesting as well, that they're starting with virtual cards rather than physical cards, because this is sort of my point on sort of older people. Older people are sort of used to physical cards, but actually, younger people or more digitally minded people and so on actually use the card less and less, if at all, right? It just becomes something that's just integrated into your phone. So, plus, of course, you save, $5 or $10 or whatever it is every time by not producing that card. So, there is a real opportunity for a sort of strong brands perhaps to leapfrog the existing providers and just almost bypass, to the point you were making, Hiroki, earlier, just sort of bypass the whole the whole physical point of sale and just go straight to virtual payments. Do you think that's perhaps part of what's happening?
I mean, I think yes, and it increases time to usage for consumers. And again, it's not only a strategy that is at play here with Orange and Visa. It's a strategy that, again, I've implemented, loads of folks have implemented. I think Monzo have done it as well, where you get people to open an account and actually you can use your account immediately. Whereas historically, you go open an account, maybe, I'm talking historically as in 15, 20 years ago, you'd go to a bank, you'd fill out a form, or you'd maybe do it online, fill out a form, take a copy of send a copy of your driving license, and then 4 to 7 days later, you'd have a card that you could use. Whereas now you can open an account digitally, have a virtual card issued, use it within 5 to 10 minutes of your account being opened. So I think there is a time to access point here as well as the cost point you raised. I think is a big one. It's one that lots of the challengers have considered. I think if we go back to Zing maybe last year, I think they didn't consider it. But card costs can be quite high. And then you look at distribution across a continent. If you're covering a load of countries, Pan-Africa, that's another challenge. And you don't want to wait 10, 15 days to get a card and make a payment when you can do it within minutes.
Hiroki, as a man who founded a company called GoCardless, you're being remarkably quiet on discussion of card payments in Africa. Do you think possibly some of the African governments and African countries are kind of missing a trick here to do what, let's say, Brazil has done with Pix or India's done with UPI, of creating, bank-to-bank payment systems, open banking type payment systems? It's great for, Visa and Orange. It's great that they're trying to expand access to cards, but is there a missed opportunity here, do you think, potentially?
I mean, I haven't looked super recently, but, I think the thing I'd look at there is the bank penetration, right? I mean, it's the reason why something like Pix has been very successful in Brazil is because there's been quite a high level of bank penetration in the population. So, you have the account to then pay from. Bank payments only works if everyone has bank accounts, right? So, I think one of the benefits of this approach is that you're able to create like virtual cards, where you're not having to create a bank account, or you're creating a virtual account instead. That is similar to the reason why mobile payments have taken off in some of these countries as well, right? Where you're effectively finding an alternative to the bank account and creating it in a slightly different way. So I think that's the main reason why there's that difference.
Yeah, so you're giving people access to payment systems, in this particular case, the card payment system, by creating a virtual account, tying it to a virtual card. So you're including people in the first place without necessarily giving them a bank account.
Exactly.
Okay, well, let's hope that Orange and Visa are hugely successful in that, and that enables more people to be brought into sort of formal financial systems. Okay, well, we will have a very quick pause and then we will be back with you very shortly.
Does it ever feel like you're a marketing professional just speaking into the void? But with LinkedIn ads, you can know you're reaching the right decision makers, a network of 130 million of them, in fact. You can even target buyers by job title, industry, company, seniority, skills, and did I say job title? See how you can avoid the void and reach the right buyers with LinkedIn ads. Spend $250 on your first campaign and get a free $250 credit for the next one. Get started at linkedin.com/campaign. Terms and conditions apply.
Okay, now for a quick look at one story we don't have time to cover in full, which is that BBVA is doubling down on ChatGPT with an OpenAI alliance. BBVA is rolling out ChatGPT Enterprise to all 120,000 employees, expanding from an initial pilot with 11,000 staff, where over 80% were already using it daily. Employees reported saving nearly 3 hours per week on routine tasks, prompting the bank to adopt a full-scale AI productivity model. The partnership includes co-creating AI tools to accelerate BBVA's digital transformation, with preferential access to OpenAI's latest models and expert talent. Initiatives include a conversational app for customers, personalized support for relationship managers, streamlining risk analysis, and developing a digital alter ego to assist employees in their work. We'll be hearing more from OpenAI on Fintech Insider in 2026. Here's a sneak peek from an exclusive interview with Matt Weaver from OpenAI.
Imagine you were to start a bank today from scratch with all the technology that's available. How might you design the entire organization to work differently? I think for many years, there have been some processes that have been incredibly manual. That has created like a slow end user experience for customers. Has created a lot of cost in the way that those processes operate. So in terms of thinking like, how can we actually redesign an organization? And then for many companies, given that they already exist, transition into that new way of working.
So I'm really interested in this story. BBVA has always been one of the most forward-thinking of the sort of established banks, one of the first established multi-channel banks to really understand and embrace digital. So I'm not surprised to see BBVA being among the early movers, embracing AI and agentic AI and so on. What I think is really interesting here about this is the way that BBVA is deploying AI not to replace its employees, but to make its employees more effective, using generative AI to try and augment what people already do, help them get tasks done faster, help them reduce errors, but also helping them create and deliver better services to customers through conversational apps and more personalized guidance for relationship managers and probably eventually customers. So really, really interesting initiative from a bank that I have a lot of admiration for. So let's keep an eye on what they're doing and how that works out. And finally, savvy gifting this Christmas to Kickstart Brits 2026 financial goals from an HSBC UK survey. A new trend of savvy gifting is emerging in the UK, according to a survey from HSBC UK, with a third of adults exchanging gifts before Christmas and many adopting less traditional methods such as spending caps or skipping gifts entirely with some people. Younger generations are leading this change in spending habits, with 26% of 18 to 20-year-olds organising secret Santa events and 27% of 25 to 34-year-olds giving homemade gifts. People adopting savvy gifting plan to redirect funds towards their financial goals, with 30% putting money to household bills instead, 28% into general savings, and 24% towards specific New Year goals like holidays or house deposits. Older generations, people 55 and older, are less likely to change their spending habits, with over half planning to maintain their traditional festive spending patterns. So what does this sort of rise of savvy gifting say about Christmas, changing consumer priorities? Has sort of consumerism gotten too far? Are we seeing younger generations maybe just thinking a bit differently, just being more careful? Or is this just the cost of living crisis just hitting home for many families?
I was going to say Christmas is getting more and more expensive by the year. I don't fit into the demographic you've just described, that under 35 demographic. But I am also in a bit of a savvy gifting era where, myself and my partner exchanged a gift recently and we set a spending cap because things can escalate. And I think you mentioned people are exchanging gifts before Christmas Day. I think the pressure of Christmas Day gifting can be some sort of psychological torment where, I think we've seen it in movies before where you see a kid open 4 or 5 small little boxes, but then they get gravitated towards the huge box with a nice fancy bow on it. I think there's a bit of pressure in spending more and more and more each year and trying to outdo each year. And I think people are just, I don't know if it's me getting older, but I'm just happy to kind of sit around, have a dinner, have a couple of drinks, and just enjoy time rather than spending more money on gifts. And maybe the younger generations have seen this and are a bit smarter than me and have locked on a lot quicker.
What do you think, Hiroki? Do you agree with Jazz? It's who you're with that matters.
Well, yeah. I mean, I've got 3 very, very young kids, so Christmas has got a slightly different energy at the moment for us. But definitely sort of recognise what Jazz is saying, especially before we had kids, where the gifting part felt, I don't know, like it just felt like it was a much less important part of Christmas, and it was more about spending time with family and creating memories together. And so. I don't know whether there's probably an element of cost of living and everything's a lot more expensive and everyone's feeling the pinch. But I also think maybe there's a longer term trend there in terms of gifting becoming slightly different in nature. And so whilst I think that we'll continue to maybe have young kids getting very excited about Santa, this isn't a surprising trend.
Christmas with children is wonderful, isn't it? Particularly when they're so small that they're more excited by the wrapping paper than the gift itself.
Yes, that's a cheap present.
All right. Well, on that note, may I wish you and all of our listeners a very Merry Christmas and best wishes for the New Year for everyone who celebrates Christmas. So thank you so much to the 2 of you for joining me. Where can people find out a little bit more about you and your companies? Hiroki, where can people find out a little bit more about you and GoCardless?
Probably LinkedIn's the best bet for us.
Fantastic. And Jazz, where can people find out more about you?
Ditto. Yeah, LinkedIn. And if you Google Fintech on the Hood, you'll find my Substack as well. But yeah, LinkedIn as well.
And as for me, Benjamin Ensor, you can also find me on LinkedIn. So that wraps up today's episode and indeed this year on Fintech Insider News. We'll be taking a short break over the festive period and we'll be back in your ears with our first episode of 2026, which will be a prediction show on Monday, the 5th of January. So thank you all so much for listening to today's Fintech Insider or all the episodes this year. If you like what you've heard, please do follow us on your favourite podcast platform of choice. And if you really like what you've heard, please share the podcast with your colleagues or friends. And if you want to join the conversation, just seek us out on social media. Just search for 11FS or Fintech Insider. Thank you all so much again and goodbye.
Hey, Ryan Reynolds here for Mint Mobile. One of the perks about having 4 kids that you know about is actually getting a direct line to the big man up north. Mm-hmm. And this year, he wants you to know the best gift that you can give someone is the gift of Mint Mobile's unlimited wireless for $15 a month. Now, you don't even need to wrap it. Give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan equivalent to $15 per month required. New customer offer for first 3 months only. Speed slow after 35 gigabytes if network's busy. Taxes and fees extra. See mintmobile.com.